Good morning and welcome to the market forecast, my futures friends, family, and team Top Step. It's great to be with you here again this morning. Happy Capital Preservation Friday, everyone. My name is John Hoagland. Thanks for trusting me with your time. And as always, our focus is seeking accurate context, always remembering risk management and remaining patient in our trading this morning. Well, we don't really have any economic numbers, but there's still plenty to focus on this happy Friday for us. We do have the Baker Hughes rig count at noon Central Time. That's going to tell us how many current gas and oil rigs are running in North America for you crude traders. But again, there's a lot to focus on outside of economic numbers today. So without the benefit of those, what are we going to be focusing on this morning? We've got stock index futures running an attempt to recover the losses this morning from yesterday's rout to the downside. NASDAQ posted one of its biggest losses in the last 4 months from what I saw. I saw somebody mention that it's the worst loss in the NASDAQ yesterday since February. Now, we all should know that there is a rebalancing in the NASDAQ this weekend. We've got the top 7 stocks in the NASDAQ. There's 100 stocks in the NASDAQ 100. 55% of them, 7 of those stocks are 55% of the nominal value of the NASDAQ 100. The other 93 stocks represent the other 45%. Now, you know which stocks those are. Those are the tech stocks. So they're rebalancing to kind of take all of their eggs out of one basket, let's say. So they're going to be taking some of the effectiveness of the tech stocks off the NASDAQ 100. I don't know how this is going to make markets react. I do know that rebalancing of the indices causes some rebalancing of investors' portfolios as well. So be cautious today, especially those trading the NASDAQ. And we have many, many NASDAQ traders here at Top Step. There could be some volatility. I'm hearing also that there's a kind of extraordinarily large option expiration occurring today into tomorrow. So lots to think about, lots to be watching in the markets. How these markets are going to react again is really always unknown. So, we're looking at, the FOMC meeting. We're looking at the rebalancing. We're looking at the American Express earnings came out today. They beat in earnings per share, but missed on revenues. They also said they're seeing that consumer spending is remaining pretty firm. So we're going to be seeing a rise in interest rates with high percentage of probability on Wednesday, 25 basis points. Crude prices have moved higher a little bit this morning, although still pretty much largely range bound inside the rollover range. Rollover is now officially over. Thank goodness for that. Apparently, China is considering adding some more stimulus to their economy, which may make them better customers of crude oil. So we're going to be seeing a lot of things going on and a lot of things to focus on. My focus is going to be on what these markets are telling me. We have to trade what we see. And by all means, make sure you are managing your risk responsibly. The VIX this morning is a little bit lower than it was yesterday at this time. It's 1378. It was 1397 yesterday at this time. Dollar index back above or at 101. So it's come off those recent lows. I think we're seeing some of that in the euro and some of the other currencies. Yesterday was 100.42. It's right at 101 last time I checked this morning. The yield on the 10-year pretty much flat at 3.8%, same as it was yesterday. Make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the Market Prep. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. And again, happy Friday, everyone. It's good to see everybody. We've got the Rooster first in the room winning the prize this morning. giving a little bit of ribbing to Will. Good morning, Haggle Matters. Good morning, JD. Tachyon, good to see you here again today. James, Joe with his word of the day, tranquility, calm, cool, collected. Nice word for us, Joe. Shaw, caprice. Bill, good morning. Jimmy Deckers, Sarah, prayers and love to you as always. Futures trading today, good morning. DeSobel, good morning. Dan Trader, Scott Saw, and he conquered. Josiah, it's good to see you this morning. Barry Brooks, good morning. John Nostick, Travis, James, David, Jimmy, Jims, good morning. General, good morning. Will, good morning. Phil, good morning. James, Jason, Trinity Daily, good morning. My spirit animal, Rusty Golfer, is here with us this morning. Nameless Trader. Robert, good morning. Colby Caesar, loud and clear. So yeah, okay, no echo, at least not yet here this morning. And yes, this rebalancing is going to be huge, right? Anissa, good morning, and of course, love the Lord, thank the Lord, right? Undercover, good morning. It's good to see you as well. Dennis, George, good morning. Trading Research, RCU, good morning. Haven't noticed. Right. Cone, FVB, Stacking Bananas. I love that chat name. That's always great. Chai, Stephen, FVB, Dustin, good to see you this morning. Michael, Jason, and Pete. It's always a pleasure to see everybody every morning. We're going to take a look here in the charts in just a second. This is end of the week, Capital Preservation Friday. Always, if you were still in the trading pit afternoon on Friday, you were probably chasing money. We don't want that for any of you. So it is Capital Preservation Friday. If you've had a good week, even if you've had a bad week, you don't want to ruin anything on a Friday to ruin your weekend. And just try and make some dough today and then get outside and do something good for yourself. We deserve that. We work really hard at this. You got to treat yourself well. You got to keep those negative thoughts to a minimum. You got to keep that positive internal dialogue. And we are, looking forward to a successful day, week, month, year, and life for all of you. So why don't we jump into the charts now? We'll take a look first here at the daily in the S&Ps as usual. So we've had a long liquidation break here yesterday in the S&Ps. We lost open interest. Volume was good, not tremendous. As we mentioned a couple of days ago, the market was seeming to get to a point where it was getting too long to continue to rally. What does that mean, too long? You get too many time frames all in one direction, then there's nobody left to buy it. It needs to pull back or it needs to consolidate for a little while to even out those inventories so that there's buyers that are available to come in and bring price to even higher levels. Now, we've been wrestling with this 5% off the all-time high level. We pretty much closed there yesterday. We opened there today. We are trying to hold above that level and also last week's high, this purple line here. So how did the auction go yesterday? Well, it lost open interest, 22,000 contracts. That's removing downward pressure, not adding downward pressure. So with this rebalancing in the NASDAQ, it's anybody's guess as to how things are going to play out today. I'm going to be looking for opportunities near levels so I can limit risk. Take a look at the 30-minute chart. Anybody see what we did yesterday? We had in Head and Shoulders. We've, I think, reached our terminus on the downside here. with the way we traded down to last week's high. The measurement measures up. So the head and shoulders pattern that we broke out of yesterday during the first hour of trade certainly played out, and it is played out. So now it's not really a factor. We've got overnight inventory to the long side. This market is continuing to try and recover those losses from yesterday. We did talk about, a pullback would allow us to repair some of the toothiness of the rally that we had here on Monday, Tuesday, Wednesday, Thursday, Friday. On Tuesday, but the NASDAQ went a lot deeper than that. We're going to see that here very shortly. And this rebalancing is going to knock things around a little bit. Be aware, be ready, make sure you're limiting risk. So it looks like we've got overnight inventory getting even longer here in the S&Ps. Here's the TPO chart. So we did not put a double distribution day together yesterday. It's a normal variation day, neutral stance. Market is likely to go looking for new areas or price levels to facilitate trade. Neutral, the market just did a pretty good job of moving lower, but all in all, it's showing that the most comfortable popular level was right here in the middle of the range, and that's what makes this stance neutral. There's a tendency for the market to seek new levels to facilitate trade. Remember, the market's job is to facilitate trade. Price is going to go to the level where buyers and sellers are comfortable conducting business. That was here yesterday, again, very centrally located. So I'm going to be looking for this market to probably move away from this range in one direction or another. There's still some, unfinished business, some naked points of control at lower levels. We've got, the high here that we put in, and we've got a naked point of control up there as well. There's no real big excess on either end of this profile. He tried to put in a late spike and failed to. That to me is a positive nuance. But again, we're looking at low excess here, but on the Tuesday move to the upside, even on Monday, we have excess down here. Buyers were present here. This could be viewed by some that use this terminology as a demand zone, because we saw buyers coming in and they pushed price higher at this level. They can still be present down here. Take a look at the NASDAQ, which is a little bit of a different story. Boy, the NASDAQ really got hit yesterday. Is this rebalancing a part of that? It could be, but we didn't really change too much as far as the positioning of overall traders. We added 2,000 in open interest on a down move, one of the biggest ones we've seen this year, and volume did increase. So the auction process yesterday in the NASDAQ was a lot healthier than in the S&Ps. This pullback, as long as we don't break upside structure, which I think we've got a ways to go before that, would actually end up being healthy for a continuation move to the upside. Here's the 30-minute chart yesterday. So here is, we took out a lot of visuals to the downside yesterday. There's still some more down there, but we took out 2 naked points of control. There's a little bit of a gap right here that could be targeted. We traded right down to the top of the gap, and then there's another gap down here. There's lots of visuals and weak structure here in the NASDAQ that could bring price to those levels. I'm not looking again for any big market state changes until the NASDAQ holds below the weekly kickoff low, which is down all the way down here at 15,070. 15,070. So on the 30-minute chart here, we're looking at overnight inventory to the long side. It was a double distribution trend day, so there's the possibility of potential repair today in the NASDAQ. I think there's less of that possibility in the S&Ps, but we're in range, in value, I'm going to try and stay patient. Take a look at the TPO chart, which tells you we've got double distribution trend day, almost you could say a triple distribution trend day. We've got big excess on the high here, an attempted late spike to the downside that did not succeed. Again, taking out a couple of points of control along the way down. And where is price now? It's centrally located. The point of control is right where we are now. The volume point of control is here. No, the point of control is up here. So even though this is a double distribution trend day, the market is trading in range in value. There is a higher probability of potential repair because we are opening below the point of control here and below an assumed point of control here in this lower distribution. So if we were going to be looking for an overnight inventory adjustment in either of these markets, I think it would be probably more likely in the NASDAQ. Travis, if you have your profile extending past 3 o'clock, which is the cash close, that may account for the difference in the point of control being in a different level. I take these profiles and I only have from 8:30 to 3 o'clock populate on them. So if you extend that extra hour, that could certainly be the reason why you may be seeing your point of control at a different level than the one that I have here. Okay, so potential repair, probably a little bit of a higher probability of that in the NASDAQ. Looking at excess a little bit up here, excess yesterday on the highs. It's going to be, and always is, an interesting trading day, right? So here's the crude. And, we put in a rollover range. We're largely still in that rollover range. I'm going to be using range bound to break out rules, which means, if we get up to last week's high, this is an opportunity for an execution. Range bound rules state if we get up to the upper extreme, we sell it until there's a proof of acceptance above that important inflection level with which we would look to go long. These are just general trade ideas, not recommendations. So the range bound rules is you fade the extremes and accepted outside of the balance you go with. We're getting pretty close to a possible execution up here. Open interest remains weak yesterday after the expiration. Overall, we lost 18,000 in open interest. That includes part of the expiration. Some of it is going to be delivered. But in the September contract alone, we lost 8,600 contracts. So a little bit of, if you'll pardon the pun, energy being taken out of crude oil inside this range. Overnight, we see that the market has been moving higher over time. We've opened with a gap. So gap rules now apply. Gap rules are if we open with a gap and can't close the gap relatively early, that is, of course, a subjective term, then we look to go in the direction of the gap. Our first move is towards a gap close. I don't want to step in front of this. There's a visual, the point of control from 2 days ago that still remains unchecked at this time. So this could be an interesting target. Overnight inventory, although takes us all the way down back to inside value and possibly even to settlement price here, which to be exact is 75.65 even. So we'll see if we can close this gap. Sometimes the gap close can be supportive, but if we start to see signs of acceptance inside range or inside value from yesterday, that changes the landscape a little bit. Now, we can pretty much see what time it was when China announced that they were thinking about possibly, maybe thinking about adding some stimulus to the economy over there. So that kind of, gave us a little potential higher demand, which was what drove price higher to begin with last night. Here's the TPO chart. Excess low yesterday, normal trading day, neutral stance. maybe a little bit extreme with a weak high. Well, you can see that even though the market pulled back, the upside auction is now proven not to be over. We've got a finished downside auction, and then we have an unfinished upside auction. The market opening higher now, proving that the unfinished upside auction had more legs to the upside. Or look at our overnight high. I mean, this is day session highs. That's an extreme up there, ladies and gentlemen. That's an interesting level. What about down below? Got a couple levels here. This one is interesting to me. It's where the excess was yesterday. We get down below that. There's a little bit of weak structure down here. This is a little bit too exact for my liking. Exactness exudes weakness, if you ask me. It almost looks like a double bottom, but the market was willing to come down here and was rejected again. So excess here, somewhat of weak lows right here. Gold. Yes, that lovely metal. All right. The auction to the upside Tuesday, which we talked about, was kind of hollow and maybe a little bit disappointing as far as I remember. Didn't bring what it was supposed to bring. It was supposed to bring momentum. It was supposed to bring volume, which it did not on the following day. So we're getting a pretty good pullback here. We're back below weekly kickoff high. The dollar is off its recent lows. That's part of the reason possibly why gold has pulled back into range. When we broke out into this, we kind of mentioned, this is a consolidation that was pretty sticky. It can be sticky again. And I think that's really where our extremes lie right now. Take a look at the 30-minute chart. All right, so we have a recent high that occurred in overnight session. Not likely to maintain for very long up there, but for now, all of the nuances are saying, well, we're kind of got ahead of ourselves on this rally. We've got 1, 2, 3 points of contact on this trend line. This would be a level that I would be looking for an opportunity because, again, it lets me limit risk. All about where my risk is. The market is holding overnight inventory to the short side. This consolidation may be doing a good job of reconciling those overnight shorts. Do we have a gap here? No, but the gap close or the fact that we opened and rejected yesterday's range, the fact that we're putting in lower highs and lower lows, the fact that we're below all these moving averages, the fact that we're kind of holding below VWAP, mostly in the overnight, has a definite negative connotation for me in gold. I don't know if I'll have the opportunity to participate in it today, but the way things look, it's looking kind of weak here, isn't it? I mean, we have excess high. Remember the overnight high, the overnight recent high was in the overnight session. So that's a little bit of a caveat to continuation to the downside. Markets don't like to leave those, but we have plenty of opportunities for visual targets in this market down below. We had a weak low yesterday, excess high, weak low, open, leaving yesterday's range for perhaps points lower. These visual levels of these points of control could be certainly targeted today. We'll just go through the euro and the 10-year quickly here. Just a second. Okay. And all right. So with the dollar coming off its lows, the euro comes off its highs. Yesterday, we saw some long liquidation to the downside on lower volume. That's kind of typical for long liquidation, losing 4,300 in open interest. We evaporated 4,300 contracts yesterday on this push to the downside. that is somewhat positive for a continuation to the downside. The question is are we going to continue to cut off volume at lower levels? So with that pop yesterday, the loss in open interest, the lower volume, the auction didn't really perform all that well yesterday, did it? It's not like a bunch of traders came in bringing money into the short side. They got out of longs, and the volume again was relatively low. Here's the 30-minute chart and what it looks like. So open, rejecting value, rejecting range from yesterday, coming through this gap. Perhaps a potential downside target could be this naked point of control that remains unchecked. It was a very strong up move on this day and left a lot of kind of holes, a lot of of weak structure in that day. Take a look at it on the TPO chart. So emotional, not really exhibiting a whole bunch of confidence to the upside. It did put in a late spike that we continued above. Now we're back to this area. It's going to be an interesting trading day today in the euro. A very narrow overnight range. And again, if we start looking lower, there's visual targets for us down below. The toothiness of this profile, the point of control, all of this down here, comfy levels, another gap here. Watch the dollar. I think that's going to be a big part of, and it always is. I'm not saying anything that people don't already know. Got to keep your eye on that dollar if you're trading this. And one last thing for the 10-year. Volume was pretty good on the downside. We lost 18,000 in open interest. So the auction process didn't bring in business. It evaporated business. But the higher volume is kind of a warning shot. We spent how many days up here trying to get through this weekly kickoff level, and sellers were just too strong up here, just too strong. So we pulled back yesterday. All those longs that were trying to break us out above this important inflection level finally said, the heck with this. We're getting out. I'm going home. Here's the 30-minute chart. So we still have a gap from yesterday. We still have a naked point of control here that did not get touched. We tested down to this one. Overnight inventory, I was viewing before seeing it just now as flat. We've seen some buyers coming in, bringing price, above value. If we maintain above value, the next kind of tough spot is going to be the bottom of this gap. If we get into the gap, we should close the gap. Gaps love to be closed. And then there is, I think, some unfinished business down below. Also, here's the TPO chart. The prominent point of control down here. The market is going to head lower. It's likely to target this. We've got the gap here, prominent point of control. Prominent point of control is a really fat profile where the price came to this level almost every time period, every half hour throughout the session. It's a very wide profile, which makes it kind of a prominent point of control. Right now, we had a double distribution trend day. We have excess high and a poor low. We could potentially fall into repair, which I don't think brings a lot of opportunity. Remember, if you remember, repair is when we open between 2 points of control in a double distribution trend day. There's a probability that price will trade to both. An assumed point of control in this upper distribution, we've been there. An assumed point of control in the lower distribution, we have not yet been there. So I think opening in range and allowing us the opportunity to be patient and wait for opportunities at those levels, I think is one of the benefits of the potential repair day in any of these markets. All right. We are ready for our day, I hope, on Friday. Again, thank you all for joining me. It's always a pleasure to be here with you. My favorite people in trading. It's always a pleasure. Looking forward to a good weekend, and let's see what the rebalancing in the NASDAQ does to the market today, and what kind of effect is it going to have when it comes into effect on Monday. Anyways, trade what you see today, traders. Always be humble, grateful, creative, and centered in your trading. Blessings to you all. Get out there and profit, and we'll see you next week.